So let's talk about Nigeria's Federal Competition and Consumer Protection Commission, or FCCPC, which announced the list of the 173 digital loan app companies whose registration are approved by the agency. This is one step further in the protection of Nigerian consumers in a new age of tech-based financial services. Joining me live here to discuss this and a few other points, Babatunde Irukera. He's the Executive Chairman, or Vice Chairman, and the CEO of the FCCPC. Thanks for making the time to be here tonight.
Thank you.
We appreciate it, sir.
Thank you.
Tell me a little bit about this, the process that led to this registration of 173 digital loan app companies.
Well, thank you. So quickly, what it was that, as it were, the problems that arose in the market and what became a proliferation and a continuing lending and recovery practices that had become not just ethical violations, but even violations of law that become abusive and violation of people's privacy. And so what it was that the FCCPC led interagency team. I included the ICPC, NITDA, the CBN, the EFCC, and NCC actually, to develop a framework to address that. And so we opened investigations sometime March last year. There have been quite a number of interventions, and we've closed down quite a number of them. And one of the products of that investigation was that the FCCPC led what really has become the interim registration framework, which was just a guideline, an initial rules-based approach to saying, look, since that digital lenders do fill a gap in the economy, especially to many people who would not be able to securitize their loans, it was important for us to at least allow ethical ones to remain in business so that people could have access to credit. And so what we did was to develop this framework where we needed to know the people in the market, we needed to know who they were, what they were doing, the source of their money, what type of interest rates they were charging, and they needed to be more transparent with respect to their customers. We needed to restrain what kind of information that they were able to pull off people's phones and what they're able to do with that information, especially with respect to making contact with people on the contact list and their loan recovery practices, the kind of language, the times they call, what kind of things they say, and then, of course, whether they compound interest or not, a transparent calculation of the way the interest is. So that's what the framework does. And so the companies that have been registered now are those who have provided the transparency and the information that sufficiently establishes that. We've worked with Google to make sure that only companies that are approved under the framework can get on the Play Store, because we recognize that that's one of the most important ways for them to proliferate and get to their customers. And so now what does this mean? It doesn't mean that people are no longer violating the law, but it has reduced the violation significantly, and at least it gives us information about those who have registered and where to get them, how to find them, and to hold them accountable even to the policies that they have submitted to us.
Interestingly, if this registration is close to other app operators that failed to meet the deadline.
Well, there are many people who didn't meet the deadline. There are some who are still incomplete. But what it was that the initial deadline was actually January 31st. What we're actually surprised about is the sheer number of digital lenders that existed. And I also think there were easily probably more than 200. We didn't think there were that many. But what the framework has also done is that it has brought some honest people who really want to get into business but wanted a legitimate and transparent framework. And so you would see that the numbers are quite many. It doesn't mean that all of them are lending. Many people are also getting the licenses to prepare for their business.
Tell me about the cooperation here between the FCCPC, the central bank, and other agencies, NITDA and NCC, that you've been able to work with to get this done.
I think
I'm really interested in that.
I think it's
what are all of you looking for? Is there a single framework for all of you, or everyone's looking for something different?
No. Everybody has a different piece where they come at it. NITDA and the Data Protection Bureau come at it from the data protection standpoint. Data controllers owe an obligation to data subjects. And so what they do with the data, how they store it to make sure that the integrity of the storage mechanisms are fine. And so they have their own piece about that. NITDA has its own piece about the technology in the first place, whether that technology is appropriate and whether it is too intrusive with respect to what it's able to pull and what it's not able to pull. Central bank licenses, microfinance banks and other financial institutions. Some of them engage in money lending. And so to that extent, central bank is interested in that. ICPC and EFCC, the Financial Crimes law enforcement investigators. I think that the synergy of the work together and the different pieces everyone is looking at has really helped us to come with what I think is a robust interim framework. That's not where it ends. This is just interim. I believe the real regulation of the financial systems requires a lot more expertise, especially from financial regulators, and I'm sure we're headed in that direction.
Interesting about what does this registration process reveal to you at the FCCPC about digital lending money business in Nigeria?
One, it reveals that a lot of people are seeking that access, an incredibly large number.
The Nigerians want loans.
A lot of numbers, yes. And that it actually does plug a very important gap in an economy such as ours, especially with the most vulnerable people. And we also discovered also that some of the lending traditions were actually historic and cultural, and they were just trying to build what might be a technological or modern framework around it. And so I think it gives an opportunity for us to strengthen what has actually been an existing infrastructure in a way that's ethical and sustainable and more enduring. And finally, we found out there were all kinds of scammers also, and there are exploiters who were taking advantage of the situation, and those are the ones that we're looking to exclude from the process. We're prosecuting some even as we speak.
How big was that?
The prosecution is not that big because for the most part, when there is a lack of clarity with respect to standards that are expected and liability, it's not the best thing to do in commerce to immediately jump towards prosecution. And so the cases that we have initiated criminal prosecution with respect to are cases that are quite complex and have other things to do with it. But the most important thing is to modify behavior and make sure that people are lending in an ethical manner.
Your agency, the FCCPC, was ranked by the Ease of Doing Business as number 3 in terms of the best efficient MDAs in Nigeria, in terms of government agencies. You scored, your FCCPC scored about almost 80 points. How did you achieve that?
Well, we've consistently ranked amongst the top 3. I mean, we're dissatisfied that we're not the number 1 because we put the work in.
Number 3 is not bad.
Well, it's not bad, but it's not good enough. I mean, there's no reason why we shouldn't be number 1. We interface with consumers, we interface with businesses. We must hold their confidence at the highest level. And I'm holding our people internally accountable to making sure that we move from 3 to 1. But I mean, we're grateful for it, and I think it's a culture that we must continue, because if you're ultimately going to build and strengthen institutions, it would be that these very important features of institutionalization are consistently high.
But I'm sure if FCCPC was ranked 5-10 years ago, the figure is not likely going to be number 3.
I'm certain it wouldn't have been. So I'd say that it's the work we've done in the past few years, working to rule, and also the fact that the administration has also promoted a framework that makes regulators aspire to that and make sure that they're doing that. I mean, for instance, signing of the executive order. There's so many things that, like I said earlier on, when there's no law, there's no crime. And so it's not only become mandatory, it's also become aspirational for agencies to do as well as they can. And we aspire to do even better.
Tell me about the big issues you're pursuing at the FCCPC for this year. Don't tell me who you're arresting, but just give me
we're expanding the scope of our work, and we've been loading up bit by bit over the years. At the end of the day, the FCCPC is still a relatively young commercial regulator, but the scope of our work is going up. We're focusing a lot more on the competition in the marketplace and unlocking what really are the barriers that have prevented small-scale industry from being able to do well. And so we're moving away from just, I think, the work we've done has helped a lot of other businesses to now survive. But we want to move away from businesses surviving because they're small, but to thriving even in a space where the big ones are existing.
Okay, we're going to have another conversation pretty soon. Thank you so much.
Thank you very much.
Thank you so much. We appreciate having you, and wish you all the best. Enjoy your evening.